houses the largest amount of displaced people, either as refugees or as IDPs globally. And so over time, we started to think as an organization, how are we able to predict that people are going to be leaving their homes, are going to be fleeing their homes, or they're going to have a need that's going to be so substantial that the national governments aren't able to handle that. And so we looked at a lot of different methodologies that have been applied over time. And what we found out is that most of the time it is qualitative, number one. And secondly, it's usually 30 to 60 days behind. And what we wanted to get is to 90 days ahead, not 60 days behind. And with that, that created a lot of questions, a lot of, let me say, thoughts that we had to go through as to how could we get to that 90-day prediction. Now, there are a few different predictive tools that are used out there today, mostly through the insurance companies. So insurance companies try to predict need over time because that's how they're able to put together their policies and put together their different offerings that they give to customers. But from a humanitarian perspective, our customers are of a different level. So our customers tend to be those in need. And so how best are we able to address those needs? And if I could just ask Mega Jane and can you mute those that have not muted themselves? Perfect. Thanks so much. I appreciate that. Sorry about that. And so what we started to look at, who really predicts the most in the world? And what we found out through our research is that it's actually the intelligence agencies. So when you look at folks like the CIA, you look at Canada, you look at any intelligence agency, their whole job is to predict what could happen and then prepare themselves either militarily or politically on how to deal with that upcoming event. And so we found an approach that we believed was very applicable to this, and we call it the humanitarian intelligence approach, which was really coming forth from a professor out of the University of Groningen in the Netherlands, Dr. Andre Zwitter. And Dr. Andre really took some time and did a large bit of research around what intelligence agencies do and how it could be applied in an unclassified environment to humanitarians. And what we found, and what he found through his research, was a few different things. The first thing that he found out is that it's got to be both qualitative and quantitative. The second thing he found out is that you have to take all the information that you get and apply it. And what I mean by that is you've got to be able to understand that there's a huge swath of types of people that give information. You have experts in the field, so you might have somebody like UNICEF or UNHCR, and these are the organizations that will give you the information. You've got farmers that have been collecting data over years. They can look up at the sky and say, oh, it looks like, we've got about one more week until the rain comes. And then you've also got meteorological departments, some of which are very, very accurate, and others which are, let us say, not as accurate as most. And if you take those three groups of people and you put them all together using this example, what we found out is that we have to take all the data. We have to take all their information that they give us, and then we have to figure out how to apply all of it at the same time. And so what we learned was, number one, again, that we need to collect all the data. Number two, we need to be able to have a confidence and be able to showcase that confidence in that data. And number three, we need to look at the time frame for which that data was collected. One of the problems that we have in the humanitarian sector is that some data points are collected once a year, some are collected once every 5 years, some are collected every week, and some are collected every month. So we had to be able to balance this point as well. Now, beyond all of that, we had to take our time also and start to look at how does all of this information work together. And so we had to look and say, what are the different data points that we need to be monitoring, and whether those data points are from 3 years ago or 1 month ago, and what are those data points telling us, and how do they work together? One of the biggest problems that we always face in our work, especially around predictive analytics, is that we're looking at a very small subset of a data set. And if we keep looking at that one, we're not able to get everything else that happens outside of that. And so what we've really tried to do is we looked at now 10 different sectors in our work using the humanitarian intelligence approach. Using these 10 sectors, then trying to define what indicators within those sectors would be applicable. And so we looked at, for example, we decided to test this model using 3 separate indicators per sector. And so, for example, if you take weather, you'd take 3 questions within that you'd want to answer. You would take political stability, 3 questions, economic stability, displacement, et cetera, et cetera. And so we put all those together. And then what we've been able to do is now fill in those data blanks over a period of 3 years. So one of the biggest problems that we're facing with predictive analytics is being able to have a data set large enough that the computers, not only ourselves, but that the computers can actually dissect that and start to look at trends. Because predictive modeling in many ways is trend analysis. You look and see what has happened in the past, and then from looking at the past, you're able to predict the future, well, you hope to. Now, when it comes to what we were going to discuss today around agriculture, you know, there's some really old methodologies that have been used that are still pretty right on. And, you know, in the United States, they use a document called the Farmer's Almanac. So the Farmer's Almanac's been going on, I think, now for almost 150 years. It was started by Ben Franklin. And what this Farmer's Almanac would do would actually be able to predict when you needed to plant. It would give you week ranges around when you could plant your crops and when you needed to harvest your crops, et cetera, et cetera. And so we started to think about that. How could they predict a year in advance? And what they did was, because they had seen over time, they had used the past to predict the future. And so we wanted to take that same methodology forward. Now, where we have gotten today and what we see today is that a lot of people are trying to predict a lot of different things. I am not here to discuss with you the prediction of what we call sudden onset crises, right? Things such as floods or earthquakes are things that we're able to yet predict. What we can do is provide very close to event warnings, meaning that if a flood, we notice that rain has been falling for 5 days, saturation level of the ground is X, the amount of the river rise is Y, and thus we know that the river will now burst its banks, you know, on date Z, and the people within 5 kilometers of, you know, the riverbank and all the way downstream for the next 150 kilometers will be affected. Those types of things we can already do, and many governments have put in very robust systems on tracking of water rise, et cetera. It doesn't mean that they're all successful. There are a lot of different rivers out there, and it's a lot of monitoring and important information that the government needs to provide, but yet we have an approach that works with that. Earthquakes, obviously a little bit less accurate. They can give ranges of sometimes years. Within the next 2 or 3 years, we know an earthquake is going to happen. I'll give the example of Nepal. They were using a 72-year timeline for Nepal, saying that every 72 to 76 years an earthquake strikes. And so we knew at thousands up to 2008, 2009, that we were reaching that time frame, that we had reached there. So we started to monitor even more closely around the earthquake being able to happen, and the government implemented certain things. But then what happened, what kind of threw everything for a loop, was that there was earthquakes on both sides of the fault. So you had earthquakes in Assam and earthquakes in Pakistan, which runs along the same fault line. And so then it became a little bit more difficult for us to predict. So again, I'm not here to tell us how we can predict earthquakes or floods. Tsunamis as well. Obviously, we know that we can just give warning, even sometimes less than 30 seconds before the tsunami strikes. So what I want to talk about today is slow onset disasters. And the slow onset disasters affects farmers, right, for the most part. It affects food production, it affects food security, and it affects the ability for markets to operate around the commodities that they're used to trading in, which is usually a food commodity. And so what we've been using now, there are a few different tools out there that I wanted to let everybody know about, some that are used only in Africa and others that are being applied globally. The first one is a classification. And that classification is called the IPC classification. So this is a donor-led initiative, which obviously we wouldn't want to see in the future, but it is a donor-led initiative from USAID, where they're actually now being able to look 6 months ahead on what they believe crop production will be. And now they'll make some assumptions around rainfall. They make some assumptions. In essence, in terms of slow onset disaster, we're really happy with how IPC is helping us in informing our ability to augment our programming to address the needs of farmers. Another one is we've just applied this in Mali over the last 2 years, which is a community-based early warning system, much like our colleagues in India are using. And so we use text SMS systems with farmers. And so farmers are able to feed back into certain questionnaires on a weekly basis on how much rain they've received, how their crops are growing, etc. And we feed that into the National Meteorological System to showcase what's actually happening. So we're getting ground truth related to the meteorology department that is able to help us really start to encourage farmers to address those needs in a more succinct way. And so by bringing together the community early warning as well as the national government early warning, we're seeing some really good fruit there. One of the things, and not to be controversial, but one of the things that we struggle with, however, is the consistency of the information and the quality of the information from the farmer level. And so we found that community level early warning systems, while can be the most effective, are also the most expensive because of the time spent on having to engage with the community in many ways. And so what we found is that in our estimated opinion, this can't be NGO driven and must be government driven. Because of the cost and because of the idea that it needs to be something that's countrywide, NGOs like World Vision and our colleagues in the field aren't able to robustly be able to provide assistance that's going to be long-standing and sustainable. And so what we've really tried to do now is work with the government of Mali on them taking this on and then setting up a government program around it. So now how do we really predict? Well, in the end, what we've done is, and I've talked about this before, it's around the data. So by collecting the amount of data that we think is sufficient, we can now get up to 3 months ahead. So we can look at either food security, so planting, rainfall, etc., and be able to predict what we think is going to happen within those 3 months. We also look at crisis. In our tool, because we're in East Africa, the two largest effects on people is number one around conflict and number two around slow onset drought or climactic events. It doesn't have to be drought, as we can see what's just happened in Mozambique. It can be cyclonic, it can be rainfall related, etc. So what we're trying to look at are these types of things and be able to predict. So we're in year 2 of our data collection, real-time data collection, and we've got 6 years of data that we use, which we believe now has helped the computer to refine closely what they believe a rise will be or a deficit would be in the indicators that we're looking at. So again, the computer algorithm that we use doesn't say, alert, there's going to be an emergency in X. What it will say is alert, there's going to be a rise in this indicator over the next 3 months, and we are able to see why. So how the other indicators all work together through the business analytics tool that we use. There are quite a few out there. I mean, the main ones that most people use are Tableau, there's Power BI, and a few other ones. There are also some statistical analysis tools that are out there that are a bit more programming related, that people have to be trained on them to use. But what we found is, as much as it is important to have the right prediction, for us it's also to be as visually pleasing as well, because people need to look at it. One of the struggles that we've always faced is people looking at our early warning data. They're like, well, you know, I don't have time to think about what could happen. I only have time to think about what's happening. And so what we've tried to do is balance the beauty of the tool with the functionality of the tool, to be frank. And we're finding it to be very, very positive, and we're rolling it out globally over the next 3 months. So I want to kind of take a pause here. We're about 20 minutes in, and take a pause here, and then open it up for any questions on what I've just started out with, and wanted to seek any of your thoughts on what I'm discussing, any questions that you might have, how it applies to where you are or your organization, but also questions about how the tool is really able to influence our decision making. So I want to open it up to questions. Go ahead, Anush. Yep.
Hi, I didn't have any questions right now, but I just wanted to ask the room if like anyone's microphone is muted or if they need help unmuting. Anyone with questions? You can also chat on the right-hand side if you can't get through. Otherwise, Christopher will continue.
Sure.
What he has to say. Yeah.
All right, so I'll keep going. Where we have stumbled and where we will continue to stumble is the consistency of data amongst all countries. Number one. And number two is the significance of that data point in that country. So let's give an example of the 30 indicators that I've spoken about in the 10 sectors. So these 30 indicators, not every country collects that data because it's not always seen as significant for that country. So the data that's collected in a place like South Sudan is very different from the data that's collected in a place like even Kenya, which is next door. And the reason why is because South Sudan is in a really humanitarian conflict context, what we call a complex emergency. And so they're looking at life-saving related indicators, where a country like Kenya is looking more at livelihoods-based indicators because it's more of a developing nation than a nation in conflict. And so we've also had to look very closely at what level of indicators we can collect consistency, because the data points don't mean anything if I have to collect different types of data for every country. Because in reality, that doesn't give me the ability to build a large enough data set to actually inform the algorithm on how to predict. The next piece is around the weighting of the indicators. When we look at certain indicators, for example, an indicator in Somalia, and the answer for that indicator in Somalia and the change in that indicator in Somalia over time, for example, severe acute malnutrition, will be very different in Thailand. Somalia usually is, the severity level is always in crisis for severe acute malnutrition, and it can raise between 5 and 10% depending on the year. But if we saw a 0.5% increase in Thailand, it would dictate to the government to have a robust response to address it, whereas in Somalia, even a 5 to 10% increase is standard fare, or something that we see happening on a yearly or bi-yearly basis. So how are we able to address those things, and how are we able to identify the indicators that we needed to really address those? So what we did was, again, this is all academically based. We worked with 17 different universities through what's called the Network on Humanitarian Action. There are universities throughout the world, from Colombia to Malaysia to Japan and the United States. And we went to them and gave them our approach, submitted to them what we were wanting to do, and then sent them the indicators that we were looking at and had them go through it and actually tell us, well, this indicator actually doesn't apply in most cases. We would rather you change it to this indicator, et cetera, et cetera. Then we went to the other early warning colleagues that we have out there. So the predominance of early warning colleagues, I know I mentioned IPC. There's another one called ACAPS, ACAPS, which is seen in a lot of conflict humanitarian settings. And we had them assess our conflict data. Then we went to IDMC, the Displacement Monitoring Center, and we asked them about our indicators centered around displacement and what indicators they had seen were causes of displacement and how we could incorporate those into our work. So the big issue with ours was that one of the faults that we found in early warning and early action and predictive modeling was that most organizations were trying to collect their own data. And meaning that they would have to send out enumerators, or they would have people in the field collecting data. And we realized that there was no way we could do that. Even with 45,000 staff that we have globally, the amount of training that would need to happen and the amount of work and money, et cetera, that would be needed was far beyond our ability to procure those funds. What we decided was there are those experts in the field, as I discussed before, like IPC, UNHCR, UNICEF. And what we do is we take data from them. So all of our data points are all secondary data that have been verified on a country-by-country basis. Because in some countries, an organization that collects data in one country might not collect data in another country. And so we've got to be able to find that information as well. In other countries, it might be the local newspaper is actually the most viable reporter of certain figures in the country, or the government offices. So we look at country by country using the same 30 indicators, but the sources from which we take our information are different. In some cases, they are the same. For example, trafficking in persons is a data point that we look at, and there are really only a few opportunities to collect that data globally, and it's usually only put out every year. And so we know that we have one or two different documents that we can go to collect that data every year. Now, while that data is only collected once a year, it still informs the integration of all the other indicators. For example, stunting is another nutritional indicator that we look at. And so stunting is usually only monitored in countries on a every 5-year basis. And so we have to then use that data. But while it seems strange to be predicting a crisis using 5-year-old data points, it's not, because it sits together with all the other data points. So we can see that if there is stunting at a certain level in a country, and that the nutrition continues to get bad through poor crops, et cetera, through the increase in global acute malnutrition or the increase in severe acute malnutrition, that we can then predict that we will be reaching a level of crisis in that country very soon. So we're able to bring all these different pieces together, both development and humanitarian indicators, to help us move towards that direction. And being able to have that verified by not only academia, but also our colleagues in the field of early warning has been very important to us. Now, again, with any sort of algorithm, it needs to be tested and has robust data behind it, and we're getting there, and we're moving toward that point. But I think that that's everyone's most difficult piece, right? We can't just use a data set. An example would be MasterCard, right? MasterCard collects almost more data than almost anybody else in the world. Well, it used to until we had Facebook, et cetera. But in reality, MasterCard used to be the single largest housing source of data globally. And it was around our shopping, what we bought, what we didn't buy, addresses, locations, where people shopped, et cetera. So they all knew all that, but that doesn't help me too much, right? So all that data that's out there is really good for their market, not for mine. So what we were really doing was trying to look at our market, right, and look at the data that we needed to collate and correlate, and have to come and bring that together. And what we found is that really and truly, this currently, there's nothing out there similar to this on a global scale. There are different tools out there doing different things, but not encompassing all of the different data sets that are out there that we're trying to pull in. And so we're testing it. We're still trying to see how it works. It does give us 3 months prediction. But in reality, since January, obviously we're just getting into the 3rd month. So what I'm really ready to do is go back to January and see what it told me, and then see if it really happened in March. And we're going to do that over the next 12 months, is kind of do that every month, look back at what was predicted, and then see what happened, and see then how our offices also address those needs to mitigate some of those disasters. And before I open it up for questions one more time, I mean, one of the things that we say, right, is that every $1 spent on mitigation activities saves between $4 and $5 for response activities. And so this, to us, is very, very important, not only for ensuring that we're able to respond faster and save more lives through mitigation activities, but also do it in a more cost-effective way, given how humanitarian budgets, while growing, are shrinking per disaster. Meaning that the humanitarian budget last year was the largest budget in history globally, but it was spread across many, many more disasters than usual. So while it looks like number-wise it's bigger, in terms of the people it was able to assist was less. And so we want to try and obviously showcase as best as possible through mitigation the savings that we can provide in response. So I'm going to stop right there for another second and open it up to questions if there are any questions. No questions in the chat? All right, so if there's no question in the chat, what I'd like to do is I'm going to show you a few of the different tools that are out there, and also walk you through our tool that we're using, just so you can get an idea of what we do. All right, so
we just got a question in the chat.
Oh, sorry, there's a question? Yeah, go ahead.
How do you calculate ROI on your efforts, by Mr. Pankaj Piparia?
Okay, how do you calculate return on investment on your efforts?
Yes.
Well, we have to get there, but it would be based on, I think our assumption will be that over time we will have to look at probably between 24 to 48 months of the predictions, the mitigation efforts that the organization took, and the effects it has on individuals. Right now, because we haven't been able to test it, we can't really see what the effects are going to be. And another problem that we face is the plethora of actors in a humanitarian response, because World Vision is not a government, right? And it is the government's job to take care of these problems. Being able to put a direct figure on our impact related to what early warning told us, what early action we promoted, and how many lives were saved, it's extremely complicated. And so we're not to that point yet of being able to actually address that. It's a great question, but it's going to take many, many years to be able to showcase that. Now, that you bring this up, I think there's something else I want to talk to you about. Now, what we've been talking about right now is predictive early warning. Now, what I'd like to talk to you about is predictive financing. So predictive financing is a little bit different. If you have predictive early warning, you're able to showcase what could happen. Now, with predictive financing, what you can say is that this crisis is happening in country X. What will it cost us to stop that problem from continuing? So how do we create resilience? How will we be able to fund enough to get the people back on their feet to be more resilient to crisis? And this is something that's just really hit the headlines in humanitarian work. We call it predictive impact and predictive financing. So they're two separate ones. One is being able to predict how much money it will cost to address the needs in a crisis. And one is around how can we create the greatest impact programmatically through our work. So that's a very, very different approach that we look at. So they're two different things. We're still getting there. Pankaj, I could easily share with you what's going on with UN OCHA, the Office for the Coordination of Humanitarian Affairs, which just opened up a predictive financing hub about 2 weeks ago in The Hague, funded by the Dutch government. And that's really the first effort that they're getting on trying to predict how much it would cost to help people, and then being able to couple that with the predictive early warning to showcase what our return on investment was, right? So you can start to see how we're going. My piece, the puzzle that I'm discussing with you today on predictive early warning is one piece of a kind of a three-piece puzzle, and the other one is on predicting impact and predicting financing. Does that answer your question? I'm sorry it's not as specific as I could be. But because we're not in a business, it's always hard as humanitarians to predict return on investment. Exactly, perfect. Thank you so much. So now I'm going to share my screen here for a moment, if you don't mind. And as we do that, and then I'm going to show you these websites that I was discussing. So the Integrated Food Security Phase Classification System is the system that is used by humanitarians, especially in Africa, and now going global, but predominantly in Africa, around how we predict food security or food insecurity. And what it's able to provide us is a lot of different things. It's a pretty robust analysis done by many different organizations utilizing both qualitative and quantitative figures. And it is seen to many of us in the field as being the premier food security classification system with a predictive focus, meaning that it doesn't look at what's happening now, it looks at what's going to be happening in the next 3 to 6 months so we can plan. It is an amazing system, and it is very, very well developed and well accepted within the humanitarian community. The next one I want to talk about is ACAPS. So ACAPS is, again, the crisis early warning tool that we look at. One of its failings, however, and one of the things that it needs to do better is be able to predict. What it does right now is give us the 30 to 60 day ante, so what happened before, or pre, let's say pre-disaster, not pre-disaster, it's not predicting. What it's telling us is what's happened in the last 60 days. And that's not very effective for us anymore. It does inform us as we design new programs to tell us what people are doing and what the needs are, but it's not telling us how we need to prepare. And so that's one of the biggest struggles that it's facing, is ACAMS. Now, lastly is the tool that I've been discussing with all of you, which is what we call the Worldview tool. And the Worldview tool is a tool that digs deep into the 10 different sectors that I was describing to you, and then looks at the different parts of those sectors and how that works. So I just want to give you an idea. So if you look here at the top bar, it's got all the different sectors that we look at. If you look really closely and you count them, there are 10. There's destabilizing events, however, is one that's a little bit different. So destabilizing events is actually part of the qualitative analysis, because we use both quantitative and qualitative to tell us if, for example, elections are up and coming, or there's going to be, there typically this time of year flooding in these areas of the country, etc. And so it helps us to have the ability to not just look at what data has been collected, but also look at what we think could be happening in the future. Some of the questions that we also ask are narrative based. So do you feel like security in the country is getting better or getting worse? I've made it a bit smaller than what the real question is, but those types of questions also inform the decision making, because as we move into prediction, we have to be able to look at what we call perceptive questioning. What is the perception of the person, the expert in the field, that is taking this data to give us in what we're doing? Just here, what you'll see is the blue ones are World Vision countries. So this is a World Vision tool, so it shows the World Vision countries, and then it goes through. I can't show you the back end on the algorithm, etc., but we are testing it and looking to see, and then we'll have another evaluation over at the end of next year. And so, so I want to pause again for questions if anybody has any questions, and I'm happy to answer any questions that you might have. No questions? Okay. So the next one I want to talk about is, where does this take us in the future? Now, as humanitarians, we have kind of a finite end to this, which is we collect the data, we can predict how to respond, and then we go to donors and ask for money to address and mitigate those needs. But is that really the long game, as we say? Is that really where we want to head, and is that really what we want to do? And the answer is no. In reality, our goal is to integrate the predictive analytics that we use for both crisis, conflict, food insecurity, etc., displacement. We want to use that to inform insurance. Now, I know that sounds strange, but what we know from developing nations is that insurance is what we use to cover ourselves, let us say, from disaster. And insurance companies work together with governments to create mitigation activities, to lower premiums. All these things work very, very closely together. But at the bottom of the pyramid, as we say, in these areas of that are constantly and consistently affected by crisis, where people live on sometimes less than $2 or $3 or $4 a day, how do we get them integrated into the market economy that we're all working within? How do we get them to be able to access insurance? And how do we inform insurance companies in the best way to develop their platforms and their offerings to these people that is, number one, cost effective, but also is resilience effective, if I can coin a phrase, being that we want them to be as resilient as possible, and part of that has to be insurance. So what we're looking at is kind of 3 different levels, and we've tested this now in the Philippines and in Ethiopia, where we've done the micro level insurance for people, and this is response level insurance, so it's insurance to help them get back on their feet. The reason why we did it in that way at the micro level is because still making an investment into pre-mitigation services is donor-led, And so how we've done this is we've developed these micro insurance programs that reduce the premium as you increase your mitigation efforts at home. So through the assessment of, for example, homeowners insurance at the micro level, we will assess all the needs in the home to have that home be more resilient to the disasters that are consistent within that area of the country. And then as they take those on, and it could be through grant funding, programmatic funding, it could be on their own, as they take them on, their premium becomes less, just like we would do in any other country, right? If you have in your car, when you talk about car insurance, if you've got these 10 different things, you've got a front camera, you've got self-driving, you've got seat belts that are automatic, you've got anti-lock brakes, your premium goes down. And this would be the same in the way that we address the needs for homes. When it comes to crop insurance, obviously it's much more difficult. There are some very well established mechanisms to look at how crop insurance is done and how it is developed and how it is offered to those in need. But in reality, what we found is a lot of the efforts around crop insurance have not been extremely effective, and that they become too costly over time. And because in the areas that are most endemic to crop disasters, these offerings aren't available because they're too expensive for not only the insurer, but also the insured. And so we want to be able to develop these packages. Now, there's one set of our efforts that are around that, and we talk about it. There's Munich Re, there's Zurich Re, some of these large insurance companies that are working very much in conjunction with NGOs on looking at how to do this. Munich Re is doing one specifically around flood insurance. World Vision, through our Vision Fund, which is a large microfinance that we use, is doing housing insurance at the micro level. Zurich RE is actually speaking to us about doing something very different, which is around organizational insurance. And so how can we take out an insurance policy as an agency to mitigate the effects of disaster in highly endemic areas? Now, you have to follow me here because this is a bit of a strange concept, but it would be that World Vision, in all of its shape and form, would take an insurance policy out, okay? And that insurance policy has a lot of different pieces within it, but just for general knowledge, it's an insurance policy. And that insurance policy is activated in two ways. Number one, if we can predict with a certain amount of probability a disaster coming, and the insurer would then release part of the funds for us to be able to mitigate the effects of that disaster. The second way, the second time that money is released, is when we have experienced a disaster in a country and we need to respond quite quickly to save lives. So within the first 36 to 72 hours, we need to respond. Now, let me give you an example in the humanitarian sector how this works currently. So currently, nobody can predict a disaster. Our new tool is, we're still testing it, but nobody can predict a disaster is going to happen. And even if we can, using IPC or some other of those tools that I've just explained, even if we can have an outlook of 3 to 6 months, the ability to access the right amount of money to address or mitigate the disaster is quite limited. Because many donors believe that is the responsibility of the government itself to mitigate that disaster. If we're able to inform the government that their population is going to be affected by a disaster, they should take that on themselves and be able to address those needs. But we know that in many places that's not possible. And so we wanted to look at a different way of approaching this, in that certain NGOs, the larger NGOs, Red Cross, World Vision, maybe Save the Children, Oxfam, those types of international NGOs are able to access this insurance policy and be able to actually get out there very quickly and address those needs in countries where the insurance provider, the government, as well as ourselves agree. Secondly, there is money that we can access, usually within 10 days of a disaster, through certain funding mechanisms that are immediately available to address life-saving needs. But what we realize is number one, it's never enough. Number two, it's split amongst many, many different sectors. And number three, the process for which it is handed out, while very efficient, is not reaching the level of need that we want to address. And so by establishing this response insurance policy that we've been working together with our colleagues on, we could actually access a much higher level of funds much faster and be able to save lives much quicker. And so we look at instances such as Mozambique today, and if this policy was effective and affected in that we could be using it right now, we believe that we could have addressed the needs much more faster. So reduce the response time by about a week. And that's when lives are on the line, a week is death or life, right? And so we believe that we, through this approach that we're definitely going through, taking with the insurance companies, that will be the new face of this. So go ahead, open it up to questions again on my last statement on utilizing insurance, and move on. Any questions? All right, well, I'm going to stop there. I've kind of covered the different parts of my part of the discussion, and I really hope that I can facilitate some questions and some answers for you all on what we're doing and how it works and why it works and if it works, and be able to encourage you to and direct you to the right colleagues if you'd like to try these types of activities in the countries you operate in.
Thanks, Christopher, so much for joining WRMS today. Like, we really enjoyed your talk. If anyone wants to stay in touch with him, he can be found on LinkedIn. I've shared his email address. Well, not your email address, your website details. And just keep in touch, and let's keep this discussion going. Chris, it was a pleasure. If you have anything else.
Thank you all, man.
Thank you.
All right. Everybody have a wonderful day, and greetings from Nairobi.
Yeah, thank you so much. Bye.
Bye-bye.